Welcome back. Well, let's get you the latest from the commodity markets. We have Manisha Gupta joining in. Manisha, what's the headline? What's the big news today?
Well, I'm looking at the iron ore prices, Surabhi, because this is an area which has seen constant declines in the recent few days. Well, we already are working with the higher tariffs when it comes to steel. And because iron ore is a major ingredient for steel, we have seen prices here continue to decline as well. So when you look at the prices in US, we're trading at an 8-month lows there. And when you look at the prices in Shanghai, we're trading at around 2-month lows onto that one as well. Well, it really has to do with on how you're looking at the markets there. Because when you look at the last 1 month, we've seen the prices decline by 3%. And in this year until now, it's been a 10% of an average decline that we've seen come in for the iron ore prices. Well, various reasons for that. I'll begin with the international markets first. And we are dealing with the 50% tariffs right now for steel. And there also are concerns about China economy. We're looking at weak manufacturing data from China, the lowest in last 2 years. That same has been the case with the US numbers as well, where the PMI numbers were on the lower side, but the jobs data did slightly better there. The street also is looking at expectations on what China would do when it comes to steel production going forward. Markets also are dealing with higher iron ore exports that we're looking at from Brazil, Australia, and there is lower inventories at port when it comes to China. And markets also are looking at further restrictions on steel production in China. Also remember, the realtors have been told to not sell pre-sell homes there. So various contradicting fundamentals is what the street is working with. Having said that, the Indian numbers seem quite on the positive side. We almost are isolated for what's happening in the international markets there. So the steel sector is looking at a stronger demand here. And if I could take you through those numbers here, the Indian steel making capacity right now is at around 200 million tons. Target is, or ambition is for 300 million tons by 2030. And when you look at the iron ore within that, well, remember, India is the 4th largest iron ore miner in the world, and it takes nearly 1.6 tons of iron ore to make 1 ton of steel. So that's the kind of number that we're looking at. This is what we've done in sense of production, 277 million tons last financial year. And the previous one at 289 million tons actually is a record high here. So when you look at the kind of ambition that India has in sense of steel production there, you will need much more iron ore there. Just to reach that 300 million tons, you will need something like 460 million tons of iron ore. And India doesn't have it right now. In addition to that, we also are exporting iron ore right now. So by 2030, whether we start importing, what India does really is import higher grade iron ore and exports lower grade. So there is a lot of mix and match that you would see by 2030. Having said that, this is what the markets do feel about the international iron ore prices going forward. We're trading at around $96 a ton right now, with most global banks and brokerages believing that $95 to $100 a ton is what we could be looking at an average. The only a lower number rather, that I have seen coming in from the markets has coming in from AOCP, or rather Goldman Sachs as well, which is talking about levels of $90, $95 at this year, and even lower in the next year. Westpac, as I was mentioning, 86. They're the only ones talking about 86, and AOC at 80. Apart from that, everybody else believes that it's going to be a range-bound $95 to $100 a ton of an average for iron ore prices this year.
All right, Manisha, thank you very much for that very